Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, April the 20th, 2018. It is options expiration today, so please note that the market is likely to get a little bit crazy near the end of the day, but we'll talk about that in just a few minutes. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. These are our trade plans. We do not know what the market's going to do. Therefore, we're putting plan together in order to have something in place and be able to execute it based on who takes control, the buyers or the sellers. And then we have two alternative hypotheses, which are our expansion plans for when we go into a trending type scenario. If you're interested in checking this out, there's no website, there's no blog, this is not a commercial venture, but we do live trading and analysis during the course of the trading day. So if you're interested in checking that out, send me an email at quantumleapfutures@gmail.com. I'll give you a free trial to come in and check out the live trading room. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Also, please hit the like button if you're watching the video. If you are watching the video and you just want to hear the hypos and not the context, the first 15 minutes is basically going through a morning routine and going through the context to lead up to our hypos. Hypos usually start around 15 minutes into the pre-market session. And I'd like to shorten these things, but if I do that, then I'm cutting down my own routine, and I prefer just to leave them as they are. So first things first, let's take a look at the levels from yesterday. Yesterday, my main hypothesis was a push up into the prior day range, failure up here in the 2703 to 270675. That's the 2-day microcomposite epoch. And then I was looking for a rotation down towards the 2690 area and possibly chopping there and pushing down into the naked close that we still have down here at 2681.25, and they basically missed that naked close by one tick. Buyers stepped in, rotated us back up, and we closed right in around that 92 area, which was the low of the IB and that prior day range high. So it was actually a decent trading day. Just my execution. I still had a decent day, but execution problems all over the place with the Sierra. Going over to the economic news, we did have the Canadian core retail sales and core CPI came out at 0.2. Retail sales came out at 0.0. It was a little bit of a miss there. Retail sales came out better than expected. In terms of additional news, we've got Chicago Fed, Evans speaking in 50 minutes. 10 o'clock, we've got the ECRI weekly annualized and index. And then at 11:15, we've got Williams. I mean, this has been a week of just Fed speakers all over the place. I mean, they just don't want to stop talking. Of course, 1 o'clock, we've got the rig count. And then that's about it for any major news today that's scheduled. Of course, they released the Comey memos yesterday, so there's going to be lots of stuff going on with that. And going into the weekend, we still have that whole Sierra stuff, hanging over our heads. It is option expiration, so I am looking for a rotational day. Max pain on the SPY, where both the sellers and the buyers of options are going to feel the most heat is right there at the centennial number at the 2700, 270 on the SPY, 2700 on the ES. So just keep that in mind. We're likely to swing one way and then the other and probably settle up. somewhere around this price. So let's take a look at the macro to micro. I always like to start my day with a simple candlestick chart. I use a 9 EMA, a 20 SMA. Let me just expand this out. What I'm doing here is I'm starting with a monthly. I don't use moving averages to trade off of. I use them for homework, and basically what I'm using them for is where we are in terms of the trend. Do we have good slope and separation? Is a trend being challenged by a break of the 9? Is it being violated and maybe a trend change by a break of the 20? And then I start on my monthly and work my way down. This way I don't get my biased to one side or the other if in the larger time frame the trend is still up, which it is. We have 14 months of one time framing up. February they broke the one time framing. March they got back above the 9, and so far in this month we've dipped below, but we're back above the 9 and the 20, and we've got a continuation pattern on the trend on the monthly. Going to the weekly, we had broke down a couple weeks ago. It looked like we were going to get a trend change. They came up and they've been fighting the 20. Now they're above the 20, and they failed, okay, the other day at that 27.18 level, and currently we're trading in between the 9 and the 20. So basically sideways consolidation. Market's compressing for another move. We don't know which direction that move's going to be. We do have repair work still above and below us. So the weekly is not really telling us much. Going to the daily, you can see that we are back above the 9 and the 20, and we're starting to get separation. Not a whole lot of slope, but we are holding above the 9 and the 20. Watch the 26.79. I'm really watching the 75.75. That's our year open, and then 73.75 is our week open. So down there, I'll talk about that in just a couple minutes. Going to the intraday. You can see we're back below the 9 and the 20. Possible trend change. They're fighting to get back above the 20 right now. I'm watching the 27.0375 as my over underline. Right now I'm looking for a bit of a move down to test that week open and that year open again. And just going one more down to the 30-minute. You can see basically sideways consolidation. So if we look at it in structure, just to give us the context, we're in this wide micro composite, this balance area that started with the breakdown day, where we fell out of this balance up here. The last price we tried to hold up at the 28.32, then we fell down, and we went all the way down into the 25. It was actually 25.29 in the Globex, and we're working our way up. So we're inside of the value area. The value area high is up here at the 24.25. The value area low is down here at 25.87. We came up and we tested this 3-day microcomposite VPOC, which was basically at that 1850 area, and rejected it, and they've moved back down. 3-day balance is above us right now at 27.06 and the value area high, which we just broke out of, which is from this gap down day, that is down here at that 73.25, and that's, again, that 73.75 area is really what I'm watching for in terms of key line in the sand below us. I'm actually going to use the 84.50. I just expand this out. You can see that right now we're in this distribution zone right here around this 91.75, where the upper side of that distribution is 98.50 and the lower side is 84.50. So I'm using 84.50 because if we get below 84.50, we're likely to go for yesterday's low, and I'd be looking for a push down into this area down here where we have our year open and our week open down in that area. Above the 98, I'm looking for them to push up to that 2703. 75, our high from yesterday, and get back into this day and a push up into the 3-day composite balance, which is up at the 2706.75. And then possibly, if we can accept this price, get a continuation up into that 18 and 20 area. We did leave that naked VPOC alone by one tick that's above us. So looking at the inventory overnight, inventory overnight is pretty balanced. We held within the RTH session from yesterday. Our high is that 98 and a quarter, and our low is down here at the 82. Fairly decent, balance area around the 93, but it's boxy. You can see if I bring this forward, it's boxy in this area. You could draw a box right here between the 90.50 and the 95, and just been chopping back and forth there. So this is going to be a tough area to trade inside of this range or box, whatever you want to call it. I call it box because it's ugly. So inventory is pretty much neutral overnight, so expect a lot of rotation on the open. There's not going to be a lot of balancing of the inventory. So if we start moving our levels over, our overnight high is 98 and a quarter, just below the value area high from yesterday. Our overnight low is 82.75. And our VPOC could shift, but right now it's sitting at the 93 and a quarter. We're going to be opening up in this distribution zone, which also runs from 97 down to 90. This is going to be our warning line. We keep bouncing. If you remember yesterday, we were banging against this for a while. If you look at yesterday, we kept on banging that 90 area for, and rejecting it until we finally broke through on that news of the release of the Comey. And then we had this beautiful FUBAR, Mr. Sneaky, and then rotated back down again. So those are all my levels. A couple things. Our daily ATR is running at a 20 period full session. Average true range is running at 53.46 right now. So off of the overnight low. Our upside daily ATR is all the way up at 27.36 and a quarter. And off of the high overnight, our daily ATR is all the way down at 26.44.75. Why do I point this out? Because we can go down to 26.44.75 or up to 27.36.25 without expanding the current average true range 20 period. Also, our weekly we're nowhere near weekly critical mass right now. Our week open is 26.73.75. So our upside weekly critical mass, it's kind of hidden here, but it's right here at the 27 and a quarter to the upside, and to the downside, it's down at 30. I think it's 36. I'm sorry, no, it's down here at 26.20 and a quarter. So this is the critical mass to the downside is not likely going to come into play. Now, what does this mean in terms to of our trading? If we get below, okay, the day range, the week open and the year open are right down here at the 75, 75, and 73 and a quarter. So that would be a definite target because the sellers, okay, are going to try to get it down below that 73 and a quarter so that we finish the week bearish rather than bullish. And that's why we watch the critical mass. If we get up which I don't think we're really going to do today, but it's possible. If we get up above this 27 and a quarter, then you're likely to get capitulation from the sellers, and the buyers take control, and we drift up into the close and probably come up into this 32 area where we've got those two former microdeposits at 31.75 and 33.75, and that still is within the daily possible range based on the 20 period. There's not much more. Our weekly upside is all the way up at 48. I don't think that's going to come into play, especially because the fact that we've got options expiration. So let's go to the hypotheses. I am looking for a rotational day, okay, and a chop in and above and below the 2700 maximum pain. So I don't know which one's going to happen first, so I put equal weight on my hypo 1 and hypo 2. So hypo 1 is going to be an open auction in range, in value. I'm looking for a wide opening swing, but ultimately I'm looking for them to push up into that 27.0375, possibly up into this VPOC or the overnight high, and then I'm looking for sellers rotate us down and come down through value and come down into this 80 area and take out this naked close, then base and push up and close somewhere inside of yesterday's range. That is hypo 1. Hypo 2 is basically the total opposite of that. Open auction, in range, in value, move down, come down and test the year open and the week open, find buyers, rotate us back up into the range, keep pushing and push up through the 2700, come up into this 27 18, 14 area up here, and then find sellers and close somewhere, okay, around the 2700. I'm thinking either 2705 or 2795 for the type of close area that I'm looking for. All right, that's hypo 1 and hypo 2. Our alternative hypos, hypo 3 is going to be a breakdown day, an open auction in range, failure to get back into the 2700s, a push down through to the 2675, 75 area, chop here, and then fail and push down and come back into this former micro composite down here and close down here in the 2657 area and take out this naked VPOC down here. That is hypo 3. And then hypo 4 is an open auction in range, failure to take out the overnight low, somewhere between the 90 and the 84. Buyers will step in strong, rip us up into the 2700, chop in the 2700 to 2703.75, break above the over underline, and then push up into this 14 to 18 area, chop in this area, and then drift up into the close up towards this 32 area. That is hypo 4. There is a fifth alternative where we get stuck, okay, inside of yesterday, and we basically just chop sideways between the 80 and the 2700. That is my alternative. Going to the gold. Gold continues to chop in this 40 to 50 area around the current microcomposite VPOC at 47. Nothing changes from the last 5 days. 41, look for the break. If we get the break, looking for a move down to 37 to 34, test the lower side of the balance, and then bounce. If we break below the 34.50, the next big target below is at 29 again to the 26, and anything below 19 brings a new trend down towards that composite VPOC that goes all the way back to 2008. If we come up and we accept the 47 again, look for another push up into the 58. And this time, I think if we come back up here and we break above that 59, we'll get the next leg up and move up towards the 1380 area. So, again, I think gold is just in this chop zone. It's very difficult to trade it right now. We need to go back into a next leg, up or down. So just waiting for the breakout of this range. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.